If you don't know about note investing, you should probably consider joint venturing with somebody. But that's a big deal. And so today I'm going to talk about the proper way to structure your joint venture with the person that you're going to do the deal with. Hi, I'm Desi Arnaz, professional investor, and I've been investing in mortgage notes since 2013. And I now own a large portfolio of mortgage notes, and I manage a fund, a $20 million note investing fund. I know how this stuff works. I built my portfolio using a joint venture strategy, and you can do the same thing. But if you're going to build your portfolio using a joint venture strategy, you should understand the documents that are required and the very best way to structure it. You can learn how to do this in detail at my website. You can go to investbrilliantly.com, but today I'm going to be sharing with you some high-level thoughts about it. The first thing you need to know is that if you're going to be doing a joint venture with someone, you're literally like in a partnership, right? So what you need to do is you need to make sure that there's a written agreement between the two of you. This document is called a joint venture agreement. My suggestion is to have that joint venture agreement drafted by an attorney. The two of you agree who's going to do what within the joint venture. By the way, you need to also understand that in a joint venture, each of you needs to bring something to the table besides just money or just work. One of you can bring the money, but you also need to put in some work in the joint venture as well. Otherwise, you're getting closer to looking more like a security or something like that, right? And so you need to bring something to the table besides just saying, hey, here's my money, don't lose it. That doesn't work. That's not a joint venture, okay? A joint venture requires that both of you guys are involved in the transaction, in the decision making, and in the activities of running that particular investment. The second thing that you want to do is you'll want to structure this in a way that gives you some anonymity. And so when you're doing a joint venture deal, what I like to do is I like to set up a trust. So what we'll do is we'll have a trust drafted, and we'll make the joint venture the beneficiary of the trust, and we'll have the trust actually own the asset, whether it's real estate or whether it's notes. That's a good way to structure this. So you have a trust that owns the asset, you have a joint venture agreement that spells out your agreement between you and your partner, how long this thing is going to last, how this deal is going to be structured, how profits are going to be split and all that, who's going to do what, and that joint venture is the beneficiary of that trust. And so what gets recorded in the public records is the name of the trust, thereby keeping you and your partner anonymous, which is important, right? Because you don't want people looking you up online and saying, wow, this person has a lot of assets, let's sue them. Right? They can't find you if you have your assets owned in a trust. So that's why I recommend doing that. Now, there's other things that you can do as well when you're putting together a joint venture with someone, and I do suggest that you consider all of that. But as I said earlier, if you want to learn the details on how to do this, I can't certainly do this in a little 2-minute or 3-minute video. So what you'll need to do is head on over to investbrilliantly.com. Over there, I have a lot of information that you can learn about investing in mortgage notes and using joint ventures and other things like that. Also on that website, I have a free course that you can download. It's called Note Investing for Newbies. It's a 10-part video series that I provide to help people understand how note investing works. So get on over there. You can download that for free. Join our network too. We have a network that's called American Wealth Builders Network. It's a network of investors and entrepreneurs. We get together online, we network together, we share ideas together, we learn together and grow together. We even do deals together. And so you can join that network. That's free. And you can do that right through investbrilliantly.com to join the network, okay? So if you're watching this on YouTube, please hit that like button and subscribe to my channel. And I'll see you guys over on the network.